Let's get live to the trading desk. Wild doesn't begin to describe the price swings we saw across the markets this week. Victor Dare joins me on the line right now. Victor, you look at this whole week, and what jumps out at you? I mean, there's so much, but what should the listeners focus on?
Well, I think we could say the U.S. dollar is rising, interest rates are rising, the stock market is rising, and the gold market is falling. I mean, that kind of jumps off the page when you look at the charts here. The U.S. dollar is going up against, like, the Japanese yen, the euro, the Canadian dollar, but where it's really soaring is against emerging market currencies around the world. And let me make this point. Over the past, let's say this year, people that have been reaching for yield have been getting into riskier and riskier investments. And one of the places a lot of money has gone is out to emerging markets. And you could go to some country you never heard of, and they pay you 7% interest instead of nothing if you put it in the bank locally. So this past week, the emerging markets got whacked 3 times. Their currencies went down, interest rates went up, and their stock market went down. You remember having Don Cox on your show a year or so ago, and he was talking about emerging markets, and he had a great line. Emerging markets are markets you cannot emerge from in an emergency. So risk assets are like that, and it was basically driven by the dollar and the rising interest rates, and of course they're hand in glove. That really hit some of the places where money had been put before. So I'd say if I was looking at things generally this week, I'd say there was positioning risk. In other words, people had put money in this and that, expecting a Hillary win. When that didn't happen, you had this tremendous reversal. We certainly saw that in the gold market in a very short term, where gold jumped $70 early as the election results were showing, gee whiz, Trump's going to win. And then that was by Wednesday morning, we were down $100 from that level by Friday's close.
I want to come back because I'm so glad you get the big star today, because you're always great, but this is such an important point you're making about emerging markets. That's one of the themes on Money Talks, that whole financial system in the emerging markets is going to explode, starting with their bond market. And I'm so glad you brought that to our attention, because that's exactly what we saw hints of this week.
Well, I make this point that, yes, the U.S. dollar is strong, and when you see the Canadian dollar, we got down to, I think, a 9-month low. It's not so much about Canada. It's the U.S. dollar's going up. Canada stayed in the same place. See it that way. But you look the other side of the border, the Mexican peso's down about 15% since we got the early signs of the Trump victory. The Mexican peso's down 60% since the middle of 2014. If the Canadian dollar was down 60%, I should say, since mid-2014, we'd be at 40 cents. The U.S. dollar is strong across the world, and that is definitely going to make going to have some impact on any number of markets.
We're going to have more time to talk about that, but I am telling you, if you're listening here today, that is one of our themes here, that the emerging markets have borrowed so much money in U.S. dollars that that's part and a major component of the next sovereign debt crisis coming up. Hey, Vic, I got to get to the bond market and what you saw there, because I was talking to Don Villalobos about it. I watched it myself this week going, my goodness, is that the reversal that at least weakens like myself have been looking for, that we've seen the low-end rates definitively now. That chart is broken down. And here we go.
Well, maybe the biggest positioning risk, as I call it, in the world has been the bond market. We hit historic low interest rates in the post-Brexit period of time. By the way, exactly when gold was making its high for this year. We had $12 trillion worth of sovereign bonds at negative yields. Since then, the benchmark United States long bond ETF, it's called a TLT, is down 15%. That's a pretty big whack for something like the bond market. Yes, interest rates have made a big move, but Mike, in terms of how I look at this, Drew and I had really got ourselves kind of withdrawn from the market before the election week. We had some small short positions in Canada, short positions in bonds, and short positions in WTI. Much less size than we normally would have, because I just didn't know how to handicap the election. I thought there could be great volatility. And this week I'm watching all this action and think, gosh, we should be in there doing something. We were pretty shy. We did buy some puts on gold midweek, But I am not sure here. We've had a big change hit the markets. This is going to take some time to play out, not just a big change in markets, but also political and social. I think there's going to be some big moves coming up, and I just don't want to make the quick judgment. In other words, you got to go out and buy commodities because there's going to be infrastructure spending. I'm a little worried that might be just a little bit too easy.
Well, we'll be here to chronicle it, and as usual, a terrific job. Thanks, Victor.
Thanks, Mike. Have a great